So a couple things that I like to do when there's earnings approaching like this is we can see that today Facebook's missed its 50-day moving average yesterday and it's dropped below it a little bit. The one thing I look for, of course, especially nearing earnings, is if the stock is making any 30-day lows. And if we take a look at, so we can see yesterday that didn't make a 30-day low. Of course, we're looking backward on a 30-day low, the prior 30 days. So at this level here, and take note of the date. Okay, it's July 24th. So if I just move this line backwards 30 days, I'm trying to do it. Well, I'm doing it with the mouse. Let me just do it with the pen. And so July 24th. So look at the dates as we go. Right down here. So if we go to June 24th, that's right here. So this is 30 days. That's a 30-day period of time. And I'm looking to see if it's a fresh 30-day low, and it's not. You know, it was lower at these dates right here. Happened to snap back really fast, okay? But so we're not making 30-day lows with the stock price being right here, okay? Would we rather have the stock be up here? Well, sure. That's kind of the range it's been in. I mean, Facebook, there's only one Facebook. They motored out a coronavirus in style, and it all intents and purposes and edge and odds here is that Facebook hangs on to what it's gained after doing this recovery here, and the edge is that it goes neutral to higher, which is awesome money press land for us. Another little thing on the side for a longer term trend, it's always healthy to see. Of course, this is the 50-day moving average. This is the 100, and this is the 200. So 50 is the green, 200 is the red, the purple is the 100. It's in between. Well, of course, COVID knocked all these like crazy, but one thing to see for a longer term health, if you will, is the 50 to be on top of the 100 to be on, and then the 100 be on top of the 200. We can see the purple here is the 100, and we can see the red, the 200 here. And so the 50's on top of the 100, the 100's on top of the 200. And the other thing is to have them all pointing higher, which they are. The 50's pointed higher, the 100's pointed higher, and the 200's pointed higher. So for a longer term trend, that's healthy to see. Okay, it's not that we're not going to have, this ad boycott right here that just got scooped right back up, and the stock's lower and breaking here down below its 50-day moving average, not making a 30-day low, but it's doing it because it's a big tech name. It's one of the big five. Anyway. So we have all of this. And by the way, on a side note, whenever we have market action like yesterday and today, where it's the sudden volatility, option prices spanning calls and puts, spanning all strike prices and expirations, get a higher price. Options have more juice in them when the volatility kicks up. And I'll tell you where that juice is concentrated the most, and it's in the expirations that are nearest. Those proportionally get the most abnormal juice or pricing. Again, both calls and puts spanning the strike prices. And if you really want to drill it down, it's the options that expire the closest, where the strike price is near the stock price. That's where the biggest juice is. And for our purposes, what that exactly means is that options that expire later today that are near the money have a crazy value, and behooves us and benefits us for us to roll and adjust, as later on in the trading session as we possibly can. just so that time value just drops out of the bottom. So our job is to not judge the entire day as if it's already gone by. And I've said it once before, I've said it 1,000 times. I love having the entire week unfold and unfurl, giving that the full week its due. All right, that said, Facebook here at 229. Next week's earnings, again with earnings, I probably said that 3 times. Next week contains earnings. The at the money premiums right now for these 230 puts, look at that, $9. Boy, a lot of times it's tempting to go into the week. And of course, one thing that I always do if I decide to go over into next week with the earnings and get that huge premium there is if I have my protection that's could be out there in October or November, I bring that right in. And usually okay, what I like to do, I do not want to keep, if I decide to go over into the earnings week, I do not keep long-term put protection in place. I move it up to a short term. And that doesn't mean next week's as well. It's usually what I do is do the week after. So I have a 2-week out put protection. And another thing that's nice to do is if in this case, if Facebook hadn't been selling off the last 2 days, and it was just kind of a normal one, in a normal situation, if you will. So we have it at the stock's at 230-ish. If I was to go into next week and sell that weekly 230 or maybe 232.50 put or whatever, but getting $9 for that week, in a normal circumstance, I might have the November, I don't know, 215 puts. Okay. I don't need all that time to go over the earnings announcement. I don't need all that time. And it's risky to have all that time in case Facebook, charges up $10, $15 in its reaction to earnings. Then there's a lot of money tied up because of this November time frame. So I want to get out of November, move it and buy like 2 weeks out. So I'll just do 2W, 2 weeks out, and they're going to cost a lot less, which means I can, I'm always looking to up my strike price. So if I take the November 215s out and replace them with 2 week out, maybe 220 puts. So they're $10 out of the money. I can tighten up my protection, which means this position requires less margin, and these puts will cost less than this. And you can see with taking in $9 for the week, the worst possible scenario could happen, and I've got $10 at risk here with taking in 9 for just that 1 week. So ideally, we get over the earnings announcement, and maybe it doesn't run $20 in one direction or $20 down. It's just, I don't know, up $5, $7, $10, has a nice surprise factor. And I look at it and I'm like, wow, Facebook just set up again with a brand new fresh surprise factor. And so at that point, will go reset a normal money press. I'll go reset it. I'll go right back out to November, maybe December with the protective puts and get right back into a normal money press. And this happens more often than not where I will go over into the earnings week.